Well, as Martin Lakos mentioned earlier, one of the most eagerly awaited reporting seasons in many years gets underway tomorrow. Rio Tinto and Transurban start the ball rolling, while Rio and other miners continue to bask in strong Chinese demand for Australian iron ore. Industrial stocks are finding life much tougher. The high Australian dollar and subdued consumer demand are taking their toll on earnings. Andrew Robertson reports.
Company profits in large measure are dependent on the state of the economy, and in the June quarter the Australian economy went backwards.
They're going to report results that reflect those conditions. It's just a matter of what the expectations are out there in the marketplace as to whether they are in line with what the companies report.
In the current depressed economic environment, it's almost certain there'll be surprises, and most of them will be negative.
BlueScope and One Steel, both of those companies we actually expect to very much report on the downside of even current expectations. Other stocks like Billabong, as well, another retailer who we believe will actually produce a result below depressed expectations. And other stocks such as Leighton, which we know have had consistent pressures with regards to rising labour costs and delays in projects.
Qantas and Virgin Blue are also in the spotlight as consumers tighten their wallets. Fund managers are suffering from the depressed state of the stock market, and there are those who believe life is getting much tougher for the banks as credit growth slows. In the struggling retail sector, Myer, Premier Investments and David Jones have all announced profit downgrades this year, but fund manager Roger Montgomery sees some good news among retail results.
I would be very surprised if JB Hi-Fi and Oriton don't surprise on the upside. They've been tarred with the same brush as all retailers, but as we saw recently, Kathmandu came out with a significantly higher profit result, and I'd like to see whether or not JB Hi-Fi and Oriton actually outperform.
Rio Tinto is expected to kick off another bumper profit season for the resources sector, with some analysts expecting earnings per share to jump by around 30%. Lincoln's Elio D'Amato expects that to flow through to the service companies that support the mining industry.
Stocks like Forge Group, Monadelphous, Decmil, Ausdrill, all quality companies generally expected to produce record profits on the back of this latest reporting season.
But the profit results refer to the past. What investors will seize on this reporting season are the outlook statements which accompany the results. In the current difficult economic climate, they'll be looking for confidence in strong earnings next time, and for the big miners that the good times will continue to roll. For Morningstar's Peter warns realism in those outlook statements will be the key.
They've got through this year in reasonable shape, and so the balance sheet and financial statements are good, the cash flow operations are good, and the conversion of, if you like, revenue to free cash flow is very, very high. Then I'd look forward to companies saying we can maintain the status quo going forward without making some wild optimistic outlook statements.
On that point, the stock market isn't optimistic. It represents investors' views on the future of company earnings. The benchmark ASX 200 index is now back to where it was in July 2005.